A very good evening to all of you. I welcome you all again to this session number 2 of Economic Survey. In yesterday's session, we discussed the first 2 chapters, that is the state of the economy and fiscal developments. Today we will be discussing 2 more chapters, chapter number 4 and chapter number 5. Chapter number 4 deals with monetary management and financial intermediation, and chapter 5 deals with prices and inflation. So today our target is to cover these 2 chapters. Fine. So let's begin our discussion, everybody. All the formalities, all the explanations, disclaimers I had given you in yesterday's class only, so there is no need for me to repeat them. Let's straight away start with the discussion on the next 2 chapters, that is chapter number 4 and chapter number 5. So first let's take up chapter number 4, that is monetary management and financial intermediation. This chapter of monetary management and financial intermediation, this chapter deals with basically our monetary policy. In monetary policy, we have first, what was the supply of money? Second, was the supply of money transmitted into the economy by the banking system? That is monetary policy transmission. What was the liquidity situation in the economy last year? Was liquidity in surplus? Was it available when needed? All these things will be discussed in this chapter. Then we'll move on to banking part. In banking, we'll see what has been the status of banks. We'll see what has been the status in capital markets in last year and some miscellaneous developments with respect to markets. This is what the objective of this chapter is. So let's start. The first thing in this chapter is the supply of money situation in the economy. For us, as in for civil services aspirants, more than the knowledge about what has been the policy rate, did they increase, did they decrease, for us more important is that we first understand the basics. We understand what are the drivers, what are the various tools of monetary policy. I hope every one of us knows, at least those of us who have already prepared are in the know of these things, at least we should know. Those of us who are expecting to write the exam this year, we should know about what these various policy rates are. We have got various tools that RBI has in order to manage liquidity in the economy, that is in order to manage the money supply in the economy. Money supply is managed through various tools such as the liquidity adjustment facility, under which we have got repo and reverse repo operations. We have open market operations of RBI, under which RBI directly indulges in buying and selling of government securities in the market. We have other tools such as CRR and SLR and MSF, through which RBI tries to control the amount of money present in the economy. Repo rate is usually termed as the policy rate, meaning repo rate is the key rate which determines the amount of money supply in the economy. It is the rate at which RBI lends money to banks for a short duration, repo rate. Repo rate has been decreased by RBI since 2019, February 2019, cumulatively around 250 basis points, matlab 2.5 percentage points has been the reduction in repo rate since February 2019. Last year, as in when COVID pandemic started, RBI decreased repo rate by about 190 basis points. So there has been a decrease in repo rate in past. Continuing with that decline, repo rate was maintained. It was maintained. Last year कहीं पे decrease नहीं हुआ, last year maintain हुआ. This decline started in around February 2019. It maintained at this level of 4%. Repo rate has been around 4% since last 1.5 years or almost 2 years now, since May 2020. Other rates, for example, CRR was first decreased and then last year it was aligned to its normal levels of 4%. Reverse repo rate, we will talk about reverse repo rate and variable reverse repo rate in just a moment. CRR, SLR, all those have been maintained at 4%, 18%. MSF rate has been maintained at 4.25%. So these are the policy rates that we have right now. As I said earlier as well, when we just started with this discussion, more than the requirement of knowing what is the policy rate at present, for us what is more relevant is that we know what is meant by these various rates, what do these rates signify, what are these rates. CRR, SLR, रेपो, रिवर्स रेपो, MSF, हमको इन सब के बारे में डेफिनेशंस ज्यादा अच्छे से पता होनी चाहिए. CRR, the proportion of banks NDTL that banks have to keep with RBI in form of reserves. CRR does not bear any interest. SLR, the proportions of banks' NDTL, net demand and time liabilities, which banks have to invest in designated liquid assets. They can keep it in cash, they can keep it in government securities, they can keep it in gold or any other designated asset, as in an asset that has been designated as such by RBI. SLR. Repo rate, the rate at which RBI lends to banks for a short duration. Reverse repo, the rate at which banks lend to RBI for a short duration. Repo, reverse repo. Since repo rate was maintained at quite a low level, there was a situation of excess or surplus liquidity that prevailed in the economy that has been prevailing in the economy since last 2 years. RBI sets these interest rates. यहाँ पे जितने भी interest rate दिख रहे हैं हमको, RBI sets these interest rates in accordance with various objectives that it would want to achieve. Broadly, RBI tries to achieve two objectives through its monetary policy conduct, that is the objective of inflation being in the tolerance range and to facilitate growth. Since 2015, when we ushered in the inflation targeting framework, the primary target of RBI's monetary policy or the conduct of monetary policy has been anchored towards containing inflation within the band of 4 plus minus 2%. Simultaneously, it would want to facilitate growth. RBI is maintaining this excess liquidity situation, that is liquidity is more, because it wants to facilitate growth. So that is the reason. If inflation rises, if there is a rise in inflation, then to control the demand side, reasons for inflation, that is to control the demand of goods in the economy, RBI would take step to reduce money supply, demand side measure. To reduce money supply, the decision of RBI would be around to control the amount of money present in the economy, to make the money available in the economy dearer or costlier. How would RBI do it? RBI would do it by increasing interest rates. Facilitate growth on one hand versus control prices on other hand. There is a trade-off between growth and inflation, meaning excess amount of money in the economy facilitates growth, but it also leads to inflation. Since past 2 years, the objective of monetary policy has been largely to facilitate growth. At the same time, since prices were in control, RBI's monetary policy was tuned in such a manner that it was towards facilitating growth. But since last year, because prices have been rising, not just in India, in rest of the world as well, in fact, more in rest of the world as compared to that in India, this has led to many countries increasing their interest rates, as in many countries increasing the supply of, reducing the supply of money in their economies. As such, there have been calls in India as well with respect to increasing interest rates or reducing money supply. As of now, RBI's policy stance has been that it has been keeping the liquidity at that surplus level so that growth is facilitated. It has started to wind up its excess liquidity from the economy. It has started to conduct some operations through which it is trying to absorb some liquidity. At the same time, it continues to maintain what is called as an accommodative stance. Whenever RBI announces monetary policy, we come across multiple words. We come across words such as neutral monetary policy, contractionary, expansionary, use bird language, hawkish, dovish, stance, neutral stance, accommodative stance. What kind of stance? We come across multiple words whenever RBI announces monetary policy. Please understand what these words mean. When RBI increases the supply of money, when RBI increases, that is from the pre-existing level, it increases supply of money, that is an expansionary monetary policy. Reduces, that is a contractionary monetary policy. RBI does not increase or decrease money supply in the economy. यहाँ पे क्या है? In this phase, RBI has not changed money supply, as in repo rate has been kept at the same level. RBI does not change money supply in the economy. But while not changing money supply, RBI is giving a signal that we are accommodative, that is, we are ready to provide liquidity as and when needed. There is no dearth of money which we are providing. So such a stance is called an accommodative stance. I hope this is clear to everybody what is meant by this term accommodative stance. So this is broadly with respect to how was monetary policy conducted, how has monetary policy been in the past year. Let's go into bit detail about what have been various developments with respect to monetary policy. First, let's have a look at various monetary aggregates. Monetary aggregates refer to various money supply measures and money multiplier. Money supply measures, I hope everybody knows M1, M2, M3, M4. M3 considered as the broad measure of money or the aggregate money supply in the economy. M3 is the most commonly tracked or used measure of money supply in the economy. M0 refers to the high powered money, that is the money that has been created by RBI in the economy. RBI की total liabilities कितनी है? The total liabilities of RBI refer to, basically broadly they refer to the currency in circulation. Your currency in circulation that has the signature, the promise of RBI governor, that is RBI's liability. Whereas total amount of money that is circulating in the economy is different from total amount of money which RBI has injected into the economy. I'll repeat. The total amount of money that circulates in the economy is different from total amount of money that has been injected by RBI in the economy. RBI injects M0, whereas the banking system from its own operations create more amount of money from it. Through the credit creation process of the banking system, the amount of money that circulates in the economy is greater than the amount of money which RBI has injected into the economy. The ratio of this actual money present versus the money created by RBI, जो RBI ने create किया है और जो actual में money present है, the money which is present actually, it is some multiple. Multiple doesn't mean have to be an integer multiple. It is some multiple of the initial amount of money that has been put in the economy by RBI. M0 and M3. You can use any measure of money supply, M1, M2, M3, M4, M0, M3. Money multiplier is by how much is the initial high powered money multiplied by to arrive at the actual amount of money circulating in the economy. That is what money multiplier is. If you look at the situation of monetary aggregates, M3, M0, M, small m is our money multiplier. Money multiplier had reduced last year. The high power, M3, the total amount of money supply in the economy, that is M3. M3 has been growing, various monetary aggregates, they have been growing, but their rate of growth has decreased. They have been growing, for example, reserve money has been growing. यहाँ पे table में, this table is there also in, obviously these tables and graphs are from an economic survey. There has been a growth in your reserve money as well. There has been a growth in your broad money as well. That is M3 as well as M0. Growth hai, but growth rate has slowed down. There has been an increase in money supply. Number one, RBI has been printing more money. Number two, total amount of money present in the economy, that is M3, has been increasing. There has been an increase in monetary aggregates, but at a lower pace than last year. Last year their pace of increase was higher, this year their pace of increase is lower. This is broad money growth. I hope this is clear to everybody. On the other hand, if we look at money multiplier being the total amount of money which is circulating in the economy as a multiple of initial high powered money. Money multiplier has decreased. Money multiplier has decreased, important thing for us to note. You see two graphs here on your right hand side. These two graphs are telling us about money multiplier. This graph is a longer term graph which translates to a period between 1950 and present. This one is a relatively short period graph, that is between 2019 and present. This, if you see, from 1950s to at present, money multiplier has been consistently increasing. Last year it has come down, एक sharp peak थी last year in 2020, there was a sharp peak. After that it has come down more broadly to the levels that were pre-pandemic, money multiplier. This is money multiplier in a zoomed manner. ये केवल इस पोर्शन को हम जूम करें. We are zooming just this portion and we are seeing what money multiplier is here. So this is with respect to money multiplier or monetary aggregates. Money multiplier क्या है? As in, what is the definition of money multiplier? What has been the trend? What has been M3? What is the definition of M3? What has been the trend of M3? What is the definition of M0? And what has been the trend of M0? If you look at various components of money supply, M3 के components क्या होते हैं? M3 के components are M1 plus time deposits. M1 is currency in circulation plus demand deposits with bank, plus M3 के अंदर add the element of time deposits as well. So M3 is basically currency in circulation plus all kinds of deposits with the banking system, demand as well as time. If deposits with the banking system increase, it's obvious that money supply will increase, as in M3 will increase. Large proportion of increase in money supply is attributable to increase in deposits with banks rather than currency in circulation. I'll repeat, large proportion of increase in money supply is attributable to increase in deposits with the banking system rather than currency in circulation. That has also increased, both have increased, but more proportion of increase is because of increase in deposits with bank. There has been a reduction in money multiplier, and reasons for that can be attributed to the weak credit creation process by the banking system. I'll repeat. We know what money multiplier is. Money multiplier is the proportion, the ratio of amount of money present to the high powered money. The banking system creates more money from its credit creation process. Because the banking system creates more money, that leads to higher amount of money multiplier. If banking system does not create money from its credit creation process, therefore money multiplier will not be high, it will be low. So if money multiplier is decreasing, it can be attributed to a decline in credit creation process by the banking system. What essentially this credit creation process is, banks take your deposits and lend it to somebody. The person to whom banks lend this money, that person will spend it and therefore somebody receives it. जिसने पैसा receive किया, that person will deposit this money back into the bank. Bank gets money back again and therefore it will lend the same amount of money again. Basically, broadly, this is your money creation process. Explained quite elaborately, beautifully in your NCERT chapter of money and banking. I would urge everybody to read that particular chapter. Money and banking का chapter NCERT में है, उसको पढ़ना, वहाँ पे चीज एक्स्ट्रा से explain कर रखी है. Okay. This is with respect to the situation of various monetary aggregates. Next, let's have a look at liquidity conditions. How much amount of liquidity was present? Here, more than our knowledge about liquidity conditions, which we know that liquidity was in surplus last year as well as last to last year, as in there was excess amount of liquidity present in the economy. More than this, we must understand what is meant by this term variable reverse rate repo, VRRR. ये मालूम होना चाहिए हमको. Please listen everyone. Since 2020, RBI has been conducting monetary policy in a manner that money is available to the economy for growth. Money is available so that it can be borrowed and spent. That has been the primary objective of monetary policy since the year 2020. RBI has tried to make money available in an easy manner. It has taken multiple steps so that money is made available. Various steps that has been taken to provide liquidity support to various sectors, they have been mentioned here in this infographic. Please, you can have a look at it. For example, RBI took steps with respect to providing money for various sectors such as health sector को provide करने के लिए, MSMEs को provide करने के लिए, agriculture को provide करने के लिए. Multiple sectors were given some special support measures by RBI. So those sectors are mentioned here. You can have a look at it about what specific steps were taken. RBI increased liquidity or maintained a stance of high amount of liquidity in the economy so that growth can be supported. In 2021, RBI started to normalize its monetary policy. Normalize मतलब 2020 कोविड पैंडेमिक वाला निकल गया, and now we need to wind down some of our liquidity operations. We need to start withdrawing some sort of liquidity while ensuring that money is available to anybody who needs it. Without increasing repo rate, we need to wind down the amount of liquidity. As in, we need to normalize our monetary policy going forward in a calibrated manner, in a step-by-step manner. Rather than reducing the amount of money supply in the economy by increasing repo rate or by making money more expensive in the economy, rather than by doing that, we can use some other means so that step by step this excess liquidity can be absorbed back. This is what started in 2021. To achieve this normalization of liquidity in the economy, RBI carried out something which is called as variable reverse repo rate auctions. Variable reverse repo rate auctions. Now, let's understand what repo rate is. From that, we will be able to understand what reverse repo rate is. Let's understand what reverse repo rate is, and from that we will be able to understand what variable reverse repo rate is. Repo rate is the rate at which RBI lends money to banks for a short duration. Reverse repo rate is rate at which banks lend money to RBI for a short duration. So banks have a lot of money in form of deposits, but banks are parking that money with RBI through reverse repo operations. I'll repeat, banks have a lot of money because RBI has maintained high amount of liquidity in the system, but at the same time banks are parking that money with RBI and earning a reverse repo rate there. Now what RBI is trying to do is, RBI is trying to carry out some reverse repo auctions. From that, it will ask banks to lend to RBI at not a fixed interest rate but a variable rate, at a variable reverse repo rate. This is variable reverse repo operation, under which banks lend money to RBI not at a fixed reverse repo rate but a variable reverse repo rate. I hope this makes sense. This is clear to everybody. So this is VRRR option, VRRR, variable reverse repo rate, market based reverse repo auctions. RBI started to, through this operation, RBI started to wind down its excess liquidity in the economy by absorbing that excess liquidity. The amount of liquidity that RBI absorbed initially, that is from reverse repo auctions, was a little bit less. Going forward, RBI switched over to these variable reverse rate repo auctions, through which the amount of liquidity that it absorbed gradually increased. RBI was absorbing something around 6 lakh crore rupees or 7 lakh crore rupees through these reverse repo auctions. Earlier they were conducted on a fortnightly basis, that is on a 14-day basis. Then RBI increased their frequency, as in increased it to 2 days, 5 days also. So this is RBI's absorption of liquidity that started last year. I hope this is clear to everybody. Absorption of liquidity or normalization of your monetary policy. Calibrated manner normalization. आप रेपो रेट इंक्रीज नहीं कर रहे हो, बट एट द सेम टाइम आप लिक्विडिटी थोड़ी कम कर रहे हो मार्केट से, आप एब्जॉर्ब कर रहे हो लिक्विडिटी. ओके, सो दिस इज विद रिस्पेक्ट टू वेरिएबल रिवर्स रेट रेपो ऑक्शंस. नेक्स्ट, RBI also increased liquidity simultaneously or made more money available in the economy through some operations which I had already said, special operations that are mentioned here. Let me just quickly read them out for you. RBI tried to provide liquidity or adequate amount of money to various sectors. For example, to healthcare infrastructure services, for small banks to support MSMEs, long-term repo operations. RBI also conducted LTRO operations. LTRO क्या होता है? Repo rate or repo operations mean in which RBI lend money to banks for a short duration. RBI does not lend money to banks for a long duration. It used to lend money to banks for a long duration at a rate of interest called as bank rate. अब कई सालों से वो बैंक रेट को रिटायर कर दिया गया है. नाउ बैंक रेट के ऊपर RBI now does not lend money to banks at a for a longer duration. But for some longer duration than the normal repo operations. Under normal repo operations, you lend money to banks for a period of 15 days, as in up to a period of 15 days. Under long term repo, you can lend money, or RBI lends money to banks for a period greater than that. Let's say 30 days, 45 days, 50 days, 2 months. RBI lends money to banks for a relatively longer period, but not for a period of let's say 1 year or 2 years. इस तरीके से नहीं, relatively longer period than what it lends under repo operations. So that is what is lending under LTRO, is long term repo rate. Various finance institutions such as NABARD, they were also provided funding by RBI. Some contact intensive sectors, especially services, they were provided some sort of special liquidity facility by RBI. RBI indulged in purchasing of government security under GSEC acquisition program called as GSAP, Government Security Acquisition Program. What is this GSAP, Government Security Acquisition Program? In this, RBI purchased government securities from the market. RBI ne, for example, there is a bank which has government security and we have RBI. RBI purchases government security from this bank. So now government security comes with RBI and money goes from RBI to bank. So this again purchase, when RBI purchases government security from market, this again leads to increased liquidity in the economy. So these were some of the steps that RBI took last year and has been taking before that as well, as in since 2020, in order to provide more amount of money in the economy. Continuing with this, let's also have a look at what have been the developments in GSEC market, government security market. I'm sure those of you who have been reading newspapers would have come across the term bond yields, especially after the presentation of government budget. I'm sure you would have come across what has happened to bond yields. अगर आप newspaper पढ़ रहे हो तो आपने पढ़ा होगा, otherwise you might not know about it. What is bond yield? Yield refers to the effective earning that you earn, that you do on a particular instrument. Effectively, how much do you earn? That is what yield is. For example, something whose cost is 100 rupees promises to pay a 10% interest. Something whose cost is 100 promises to pay a 10% interest. Therefore, if you purchase it for 100 rupees, you will get 10% interest rate. This 10% interest that you earn becomes equal to yield. However, what may happen is that there is a huge demand of this instrument which is offering you 10% rate of interest on 100 rupees. Therefore, this instrument whose cost is 100, you may end up buying it for 105 rupees. Because there was a huge demand of something, you purchased it for, everybody wanted to buy it, and therefore its market price was 105. अगर मार्केट प्राइस 105 है तो आपको कितने पैसे मिलेंगे? You will still get 10 rupees of interest on 100. 100 रुपए का वो इंस्ट्रूमेंट था and you will still get 10 rupees of interest because it has promised to pay 10% on 100. But effectively, how much do you earn? You have paid 5 rupees extra. Therefore, effectively you will earn only 5 rupees. Effectively, आपको मिला तो पेमेंट तो आपके अकाउंट में 10 रुपए की ही क्रेडिट होगी. When interest is paid to you, you will receive 10 rupees payment in your account. But effectively, how much have you earned? Effectively, you have earned only 5 because you paid 105 rupees. You have paid 5 rupees premium for something whose worth was 100. Versus, presently, the price of that thing is 105. Hence, at present, the yield is 5. एक ऐसा इंस्ट्रूमेंट जिस पे इंटरेस्ट रेट 10% मिलता है, at present, at this moment, its value is 105 rupees in the market. Therefore, the present yield is 5 rupees. Versus something happens tomorrow and because of that, value of that instrument decreases from 105 to 103. जिस इंस्ट्रूमेंट की वैल्यू मार्केट में 105 रुपए थी, अब वो कम होके 103 रुपए हो गई है. Now, if you purchase it for 103, how much will you earn effectively? Now, effectively you will earn 7 rupees. 10 रुपए अभी भी आपको मिलेंगे, लेकिन अब आपने 103 दिए. So now yield increases from 5 to 7. There is a dumping of this instrument in the market. Nobody wants to buy this instrument. Everybody wants to sell this instrument in the market. Now, this instrument whose cost was 100 may sell at a price less than 100, हो सकता है 95 रुपीज का बिके मार्केट में. If you purchase something whose worth was 100 for 95 rupees, what is the effective earning? Effectively you will earn 10 rupees interest plus 5 rupees discount जो आपको मिल गया है. So effectively you will be earning 15 rupees. So yield becomes 15. So this is how yield changes. Yield of any instrument changes with its price. If price is high, yield is less. If price is less, yield is more. For us, it is important to know how does price of an instrument change. Price changes based on basically demand and supply. If there is greater demand for something, its price will increase. If there is lesser demand for something, its price will fall down. If there is a greater supply of something, its price will increase. If there is less supply, its price will fall down. Its price will increase. So demand and supply, increase demand, increase in price, decrease demand, fall in price, increase supply, fall in price, decrease supply, increase in price. So basically, demand and supply of any instrument will determine what its price is, and from that we will understand conversely what the yield is. Price is high, yield is low. Price is low, yield is high. Now understand the yield for government bond. Government bond is that instrument which is being traded in the market, which is available in the market, and it is available at a certain price right now. Therefore, given its certain price at present, it has some yield. उसकी अभी इस समय कोई yield है. Versus its price increases, therefore its yield come down. Its price decreases, therefore its yield goes up. When yield on government bond goes up, that means price of government bond is falling. Price may fall because of many reasons. कई reasons हो सकते हैं जिसके वजह से price fall हो. There can be some, largely there are probably negative reasons for the government, but there can be some positive reasons as well. Point is, there would be many reasons because of which price of government bond may fall, which may cause increase in yield. As far as government is concerned, देखो price तो increase decrease किसी भी कारण से हो सकता है, लेकिन सरकार के लिए इसका क्या महत्व है? What is the significance of increase or decrease in yield for the government? This is what is more important. At present, yield on some instrument is 5 rupees. सरकार का एक बॉन्ड था जिसकी वैल्यू 100 रुपए थी, लेकिन मार्केट में उसकी वैल्यू 105 रुपए. इट्स मार्केट वैल्यू इज 105 rupees. Therefore, the yield is 5 rupees. I hope this point is clear. Now, government wants to borrow more. सरकार को और पैसा लेना है. Government wants to borrow more from the market. If government has to borrow more from the market, then it will have to come up with a new bond. Government will launch a new bond. Think from a buyer's perspective. For example, I am the buyer. I have to purchase that government bond. That means I have to lend money to government. The existing bond, the bond which already exists, is giving me a return of 5%. The bond which already exists is giving me a return of 5%. If government comes up with a new bond of equal maturity, if government comes up with a new bond, then that new bond must also promise me the same effective return which the present bond will give me. The present bond is effectively giving me 5 rupees. Therefore, the new bond should also effectively give me 5 rupees. The interest rate that the government will promise on new bond will be 5%. Why? If government promises less rate of interest, nobody will buy this new bond because an old existing bond already pays higher interest or higher yield. If government promises high interest rate, obviously government will be bearing a more cost. तो सरकार जो भी bond issue कर रहा है, which is the government in this case, anybody who is trying to borrow money, that person will intend to borrow money at least price. तो गवर्नमेंट तो प्रॉमिस करने को कुछ भी कर सकती है सरकार. गवर्नमेंट कैन प्रॉमिस दैट आई विल पे 50% रेट ऑफ इंटरेस्ट. ऑब्वियसली दैट वुड नॉट बी इन द इंटरेस्ट ऑफ गवर्नमेंट. So government will like to promise least rate of interest, and what is the least rate that government can promise at which it can sell bonds? It can sell bonds at a rate of interest which is equivalent to the present or the existing yield on government bonds. Now realizes, with this information, now realize the significance of yield on government bonds for the government. If the yield on government bonds increase if there is a if there is a increase in yield on government bonds. As you can see here, if there is an increase, that means it will make new borrowing for government costly. सरकार के लिए नई borrowing अब costly हो जाएगी. New borrowing for government will become costly, and that is why a hardening of yield becomes a little bit problematic for government. From government's point of view, it would not like yields to increase. Reasons for increase in yield कुछ भी हो सकता है जिसकी वजह से प्राइस चेंज हो रहा हो. प्राइस में चेंज, प्राइस ऑफ गवर्नमेंट बॉन्ड में चेंज, प्राइस में इंक्रीज और डिक्रीज. यील्ड इंक्रीज कर रही है मतलब प्राइस कम कर रहा है. प्राइस ऑफ गवर्नमेंट बॉन्ड इज फॉलिंग. Price of government bond may fall because people do not have trust in the government that government will not be able to return money. Hence, the price of government bond may fall. Price of government bond may fall because equities become more attractive as compared to government bond. There is more traction in equities. Equities are promising more returns. Government bond is not able to get that much, give you that much return. If economy is going to do well in future, probably people will move their money to equities rather than in government bonds. So therefore, price of government bond may fall because of that as well. Crude oil prices increase. There is change in global liquidity conditions. Foreigners had purchased government bonds and therefore they are now dumping government bonds in the market. Foreigners who had purchased government bonds, they are dumping government bonds in Indian market and they are going back and taking away their money. Again, supply of government bonds will increase, which will cause a fall in their price. So any of these things may cause a fall or increase in price, which will cause a change in yields accordingly. So this has been the development in government securities market last year. On your right hand side, you see two graphs. You see a graph in which there are two lines, as you can see. These are yields on 10-year and on long duration and short duration. This is 10-year government bond and this is 1-year government bond. एक साल के लिए borrow करना है, interest rate कम है. 10 साल के लिए borrow करना है, interest rate ज़्यादा है. Usually the gap is not so big as compared to what it is since last 2 years. The gap between the yields on 10 and 1-year government bond is a bit bigger as compared to what it usually is. This is with respect to government bonds. This is with respect to yields on government bond. Okay, next let's move on to the banking part now. So this was with respect to monetary policy, conduct of monetary policy last year, what has been the liquidity situation, what has been monetary aggregates, what has been the situation in government securities market. Now let's move on to the banking system. Banking system, you see here, very important graphs on your screen. One is a graph of NPAs and other is the graph of capital adequacy ratio. A very important and positive development for the Indian economy. NPAs had been coming down consistently and right now they stand at 6.9% of total advances. Gross NPAs, GNPA. This is GNPA, gross NPAs. At the same time, the capital adequacy ratio has been rising, CAR. What is GNPA? What is capital adequacy ratio? NPAs, non-performing assets, are supposed to earn interest for the bank. Bank के लिए asset क्या है? The asset for the bank is the loan that it gives. Bank gives a loan, that is an asset. It is supposed to generate an interest. If an asset is not generating interest, that means it is not performing according to what it was supposed to perform. Non-performing asset. Gross NPAs is total loans that are non-performing along with the provisioning against those loans. When bank lends money, it has to set aside some money from its own capital. अपने पैसे से, deposit के पैसे से नहीं, अपने पैसे से. Same thing in English. When bank lends some money, it has to set aside some money from its own capital on account of the loan that it has given. That money which it sets aside is called as provisioning. When a loan becomes NPA, provisioning against that particular loan increases. If it is a secured loan, provisioning increases a little bit less. If it is an unsecured loan, provisioning increases more. So point is, whenever bank lends money, it has to, I'll repeat, whenever bank lends money, it has to set aside some money in form of provisioning from its own capital, number one. And when that loan becomes, if and when that loan becomes NPA, the amount of provisioning increases. Gross NPAs are total amount of bad loans plus provisioning. Net NPAs are bad loans without provisioning, that is only the bad loans which are there. Gross minus provisioning is equals to net. In 2014, you see there is a sharp rise. 2014-15 में there is a sharp rise in banks NPAs ratio. 2014-15 के बाद there is a sharp rise in banks NPA. They rise to a peak of about 11%. For public sector banks, this peak was somewhere around 17%. लगभग 17% was the peak for public sector banks. What is it that happened in 2014 that NPAs rose in such a fast manner? एकदम peak आ गई NPAs की एकदम से. They picked up drastically after 2014. What is it that happened? What happened was what is called as AQR. AQR is Asset Quality Review. AQR refers to Asset Quality Review. Asset Quality Review was undertaken by RBI in order to recognize the true extent of bad loans in the banking system. What banks used to do before 2014 was that banks were pushing their bad loans under the carpet. They did not recognize them as bad loans, rather they restructured them, categorized them as some sort of special mention account or some stressed asset, but did not categorize them as NPA. For all practical purposes, for all even theoretical purposes, for all practical purposes, those loans were NPAs, but banks used to push them under the carpet. After 2014, RBI undertook an AQR, Asset Quality Review. Under this, RBI forced the banks to recognize all those assets which had been evergreened into NPA, which had not been recognized as NPAs, and that is why you see a sharp rise here. Improvement in health of banking system started gradually, and now it is starting to show results, as in NPAs have decreased to almost half the levels what they were at their peak. In your exam, question may be asked, arrange the following in the order of NPAs. You may have public sector banks, private sector banks, NBFCs. तो पब्लिक सेक्टर बैंक्स के एनपीएस सबसे ज्यादा हैं. एनपीए ऑफ पब्लिक सेक्टर बैंक्स आर हाईएस्ट, एनपीएस ऑफ प्राइवेट सेक्टर बैंक्स आर लोएस्ट. बिटवीन देम आर एनपीएस ऑफ एनबीएफसीज. नॉन बैंकिंग फाइनेंस कंपनीज, उनके भी एनपीएस होते हैं. नॉन बैंकिंग फाइनेंस कंपनीज, NPAs of public sector banks somewhere around 9%, NPAs of private sector banks somewhere around 4.7%, NPAs of NBFCs around 6.55%. All this information is from your economic survey only. More importantly, NPAs of the banks have decreased. Be it public sector banks, be it private sector banks, NPAs for both have decreased. NPAs of NBFCs have increased. A bit marginally, but NPAs of NBFCs have increased. Number one. Number two, despite a fall in NPAs, there has been a slight increase in total stressed assets. Stressed assets. What are stressed assets? Stressed assets are NPAs plus restructured accounts. Restructured loans. Loans that are categorized as, let's say, special mention accounts, those loans, all those loans become part of your overall stressed assets. Stressed, any asset that shows sign of stress. Technically it has not yet been categorized as NPA. NPA कब categorize होगा? जब 90 days तक either principal or interest is not received. Then it would be categorized as NPA. But signs of stress can be visible even before that, even without defaulting on payments for 90 days. So if you include all the stressed assets, then stressed assets have increased marginally, but as far as NPAs are concerned, NPAs have come down. Stressed asset means there has been a marginal increase, a very small increase in stressed assets. The strength of the banking system to deal with crisis, the strength of banking system to show that they are ready to lend money to the economy is reflected through your capital adequacy ratio. Capital adequacy ratio, which is measured through capital to risk weighted assets, capital to risk weighted assets, capital of banks upon risk weighted asset. This is your CRAR, also called as CAR, capital adequacy ratio. Under Basel III norms, capital adequacy ratio has to be maintained at 9% level by RBI. Basel III norms की compliance है 8%, RBI has set the compliance at 9%. Over and above 9%, RBI has set a 2% plus 2.5% capital conservation buffer, CCB. At present, the capital adequacy ratio of the banking system is around 16.5%, which is well above Basel norms plus capital conservation buffer. So banks in India right now are adequately capitalized. The source of capital for banks, for public sector banks, they have been capitalized by the government as well, that is through direct budgetary support, through recapitalization bonds, and by raising equity capital. Private sector banks, largely they have improved their capitalization by raising more and more capital from the various sources. So this is about strength of the banking system. Continuing with our discussion on NPAs, there was a very important development that took place last year, which was setting up of NARCL and IDRCL, National Asset Reconstruction Company Limited and India Debt Reconstruction Company Limited. NARCL, what is this asset reconstruction company? What is meant by the term asset reconstruction? Asset reconstruction means, it doesn't mean to reconstruct a broken building, a fallen down building. That is not what is asset reconstruction. Asset in finance terms is, let's say, a loan. In banking terms, a loan that was given. What is a broken asset or a broken loan? A loan which is not paying back. What is a reconstructed asset? What would be a reconstructed asset? A reconstructed asset would be that loan which was earlier not paying but has either started to repay, it has reconstructed. If it has not started to repay, then you are able to recover whatever you can from this. Either you have sold off those assets, you have been able to recover some proportion of the money that you lent, you have changed the management, the new management has come and they are trying to run the company better, therefore it has reconstructed, business has improved, anything has happened, and from that you have been able to reconstruct that asset. That is what is meant by the term asset reconstruction. The basis for setting up ARCs is in the SARFAESI Act. SARFAESI Act 2002, which deals with securitization, asset reconstruction, securitization and asset reconstruction of financial assets and enforcement of security interest. SARFAESI Act deals with these things. SARFAESI Act gives the legislative backing to setting up of ARCs. ARCs are there in our country. Asset reconstruction companies have been there in the company thanks to SARFAESI Act. But ARCs which are already there are small in size. Think about it. Why would anybody purchase a bad loan? Why would anybody want to take care of a bad loan? An asset reconstruction company's task is essentially to take over a bad loan and try to recover as much as can be from that. There is a real estate project. That project has taken a loan of 1,000 crores from the bank, and now that project is lying in shambles. Because it is lying in shambles, that real estate agency is unable to pay back to the bank the money that it had borrowed. Principal interest कुछ pay back नहीं कर पा रहे हैं. Because जिसका खुद का project है, जिसकी खुद की company है, वही नहीं चला पा रहा है, how would anybody else start and take over that company and start to run it better than that person? First. Second, bank has lent 1,000 crores to that. I will come and make an offer to bank that I will give you 300 crores, मैं आपसे 300 करोड़ में चीज खरीदना चाहता हूं जिस चीज की वैल्यू 1000 करोड़ है, एज इन बैंक ने तो 1000 करोड़ रुपए दिए हैं, the value of something is 1000 crores, but I will give an offer to bank that I want to purchase it for 300 crore rupees. Bank would be obviously reluctant to sell it to me, especially a public sector bank. If a public sector bank accepts your offer, there can be allegations of corruption that you have sold something whose worth was 1000 crores to 300 crores only. If a public sector bank or any bank does not sell it, it's quite natural that the value of that asset will continue to deteriorate, and therefore if its value deteriorates, market value that anybody is going to offer to you would further come down. आज तो कोई 300 करोड़ रुपए ऑफर भी कर रहा है, आज से एक साल बाद कोई 200 करोड़ भी ऑफर नहीं करेगा. So there is a difficult decision to be made that shall I sell this non-performing asset at a discounted price or not. The person who is offering the bank to purchase this bad asset is that ARC who has expertise in either disposing of that asset for a higher value and make some profit, or to hire some experts and start running that project better as compared to and make it a performing asset. Any ARC which has to purchase these bad assets must itself be well capitalized. अगर मुझे 200 करोड़ रुपए में कोई खंडर खरीदना है, if I have to purchase in 200 crore rupees or 300 crore rupees a project which is not functioning, a project which is not starting, then I should be ready to bear those losses myself. I must have that much amount of money which I can afford to invest in a project that has gone bad, which is not performing itself. So therefore, I myself must have a lot of money to invest in such a project. This is what ARCs do, and ARCs therefore must be highly capitalized. If we don't have big ARCs in the country, then all those big loans which have become bad loans on bank books, those bad loans will continue to be there on bank books, and therefore nobody will be able to purchase them. If bank had given a loan to somebody for 50,000 crore rupees, किसी आयरन एंड स्टील प्लांट को दिया था, किसी थर्मल पावर प्लांट को बैंक ने लोन दिया 50,000 करोड़ रुपए का. Now that loan has become NPA. Who will purchase that loan? Nobody. So bank will have to recognize that it is almost complete money that has been lost. Neither does bank have expertise, nor does bank have time to go and run that thermal power plant. Neither does bank have time to auction all the properties of the thermal power plant. Bank will hire an ARC, bank will ask an ARC to take over this loan from bank, but to take over this loan from bank, the ARC must itself be highly capitalized. Since ARCs in the country are small, and it's quite obvious that they would be small, nobody has that much money that they will be willing to purchase bad assets. The government has asked the banks to set up NARCL together. Sarkar ne set up nahi kari hai. It is not a government company. It is a company that is owned by public sector banks together. Public sector banks together own NARCL. IDRCL is jointly owned by public and private sector banks. 51% ownership of IDRCL is with private bank, 49% is with public sector banks. NARCL is held by public sector banks. This is that quote unquote bad bank, not exactly a bad bank, but an ARC, asset reconstruction company, which will take over bad loans from the banks and then will try to dispose them off in a manner best for the banks. This is basically what NARCL does. It is an asset reconstruction company floated jointly by the banks together. When the NARCL, National Asset Reconstruction Company Limited, when NARCL makes an offer to the bank, again continuing with that example of 1000 crore rupees of loan given by bank, and some ARC is offering a value of 300 crore rupees to the bank. When NARCL, National Asset Reconstruction Company Limited, when it makes an offer to the bank to purchase that asset for some price, let's say 300 crore rupees, then that bank will invite bids from other ARCs as well. This is एक तरीके से banks की अपनी ARC, a joint venture of banks, which is this ARC. Now this bank who has been offered this money by NARCL will invite bids from other ARCs as well. This method is called as Swiss challenge model, Swiss challenge method. Banks other ARC से भी bid मंगवाएगा and then depending upon whose bid is the best to that entity, bank will sell that asset. This is basically how functioning of NARCL and IDRCL will take place. Let's look at monetary policy transmission. Next topic is monetary policy transmission. Monetary policy transmission refers to how effectively have banks been able to reduce their lending rates in accordance with reduction of rates by RBI. As we have seen in the first slide, RBI ने अपने rates कम किए, repo rates were decreased. Repo rates decreased by cumulatively 250 basis points since February 2019. By how much, or did they at all, did the lending rates by banks decrease? Banks जिस rate पे lend करते हैं, क्या वो rates decrease हुए? The rate at which me and you are getting money from banks, did those rates decrease? RBI reduces rates, do banks reduce their rate? This is what is meant by monetary policy transmission. Monetary policy authority is RBI, but most of its tools of conduct of monetary policy lead to implementation of monetary policy decisions via the banking system. So if RBI takes a decision and banks do not implement that decision or do not pass on that decision to the economy, then RBI's monetary policy will not be successful, will not be effective. We see that how effectively have banks transmitted monetary policy decision to the economy. RBI decreased its interest rate by about 250 basis points. At the same time, banks reduced their lending rates by about 190 basis points. As we can see here, यहाँ पे banks have also reduced their lending rates. One of the period that we have witnessed last 2.5 years, this period has been the period in which monetary policy transmission has been quite effective as compared to any other period in past. Monetary policy transmission has been quite effective as compared to any other period in past, as in RBI decreased their lending rates, at the same time banks also reduced them. Obviously not by the entire amount, RBI ने decrease किए 250 basis points से, but banks ने effectively decrease किए by 190 basis points, but still a large part of monetary policy decisions had been transmitted to the economy by the banking system. This is monetary policy transmission. Monetary policy transmission, why was it effective last year? Monetary policy transmission had been made effective because of two things. Number one, in 2016, RBI started this process of MCLR, that is marginal cost of funds based lending rate. The base rate at which banks were lending money, base rate as in the minimum interest rate at which banks used to lend money, that base rate was now a transparently declared formula based base rate, which was MCLR. आपको formula बताना पड़ेगा, you have to disclose the formula of how are you calculating your base rate, which is now MCLR, and that formula must be such that it clearly distinguishes between your fixed cost and variable cost. That variable cost is basically your marginal cost. That is why marginal cost of funds based lending rate, MCLR. In 2019, to further improve this MCLR system, RBI asked the banks that their marginal cost of funds should be something which is an external benchmark, to explicitly include certain external benchmarks in their cost of funds, in their MCLR. These external benchmarks include such as repo rate, yield on 10-year government security, interbank call rate, etc. कोई external interest rate, any rate that is external to the bank which is deciding MCLR must be part of bank's MCLR, and that has led to a betterment of transmission of monetary policy. Repo rate will decrease because RBI is decreasing, therefore if repo rate is there in your formula and it is decreasing, therefore your MCLR will also decrease. If there is call rate matlab the rate at which banks lend to each other, call rate, interbank call rate. If call rate decreases, then again that means if it is there in your formula, then your interest rate will also decrease or your MCLR will also decrease. So that is what has led to a decrease in interest rates in accordance with RBI's monetary policy, hence a better transmission of monetary policy. It was further aided by excess liquidity conditions, because liquidity conditions were there, because there was an excess liquidity conditions, banks had excess money with them and therefore they could lend money at a lower rate of interest, and therefore this led to better transmission of monetary policy. There is a box in your material which there is a box in your economic survey that talks about deposit insurance. Very, very important from prelims point of view. Deposit insurance scheme, that box is really important. If you have material with you right now, you can mark it. As I said, the summary of economic survey would be uploaded. I'm not so sure if it has been uploaded as yet or not. We are adding some questions to the summary so that when you download it, when you look at it, you can also solve some questions at the end of it. We are adding some questions. It will be uploaded soon. Soon it will be uploaded. The link will be there in the description box of your YouTube video. Still, there is a box in your economic survey that talks about Deposit Insurance and Credit Guarantee Corporation, DICGC, insurance of deposits. That box is really important. Few important findings. Last year our act was amended. Our Deposit Insurance and Credit Guarantee Corporation Act, DICGC Act, was amended last year. Under that amended act, deposits up to rupees 5 lakh are now insured. Your deposits in your banks up to 5 lakh rupees are now insured. Questions क्या हो सकते हैं इसके ऊपर? Question can be in the form of which of the following banks can avail the facilities of DICGC, Deposit Insurance and Credit Guarantee Corporation. In which of the banks will your deposits be insured? Is it only scheduled commercial banks or other banks are also eligible? All type of commercial banks are eligible. Payment banks, small finance banks, regional rural banks, cooperative banks, local area banks, and obviously scheduled commercial banks. Deposits in all of these banks are insured by DICGC first. Second, you don't have to do anything to get your deposits insured. As soon as a bank gets a banking license, जैसे ही किसी बैंक को banking license मिलता है, वैसे ही उसके after that, obviously it will commence operations after that once it has gotten the banking license. As soon as it gets the banking license, it has to pay some premiums to DICGC to insure its deposits. So they become automatically insured. By increasing the limit from existing 1 lakh to 5 lakh rupees, now almost 98% of total bank accounts are insured. Almost 98% of total bank accounts are now insured. Very important things. About 51% of total amount is insured. 51% of total amount, 98% of total accounts. Accounts versus amount. Both of these are well above international standards. International standards are about 80% of bank accounts and about 20 to 30% of total amount is insured. Whereas because of this amendment in India now, 98% of bank accounts and about 50% of total amount is now insured. So very important box in your material, please have a look at it. Few other aspects with respect to banking. There is a sectoral credit growth chart that is there. Please have a look at it. Growth of credit in various sectors. Some important point that let me tell you. Growth of credit in services is quite low. Growth of credit in industry has picked up. It was low but it has picked up. Services के अंदर still there is a muted credit growth. This is an important point. With respect to digital payments, all of you know about that India is the leader in digital payments in the world. Prelims में क्या सवाल पूछा जा सकता है? Prelims में सवाल पूछा जा सकता है, what is e-rupee? E-rupee. In the budget this year, there has been announcement about digital currency, digital rupee, probably to be launched by 2023. In your economic survey, there is a very important thing about e-rupee. E-rupee क्या है? E-rupee is a person specific and purpose specific digital voucher Very important thing from prelims point of view, person specific, purpose specific digital voucher. You give voucher to somebody, so e-rupee is that digital voucher. More importantly, it is not required for you to even have an internet connection. It is not required for you to have a bank account. It is not required for you to have a smartphone to access this e-rupee. You can access this digital voucher without a smartphone, that is on your purane wala phone. You can access this without internet, that is using SMS only. You can access this without even having your bank account. Why? Because it is person specific and purpose specific digital voucher. Only the person for whom it is meant can encash it or can use it, and it can be used only for a specific purpose. This is what e-rupee is, important thing from prelims point of view. Okay. Moving on, let's move on to some aspects of markets. Last year, really good for capital markets in the country. FIIs put in less money as compared to what they did year before. Even then, Indian indices rose to their record high last year. They fell down in the month of October, November, December, but have been recovering a little bit. So Indian indices have given in general a greater return than most of the indices in the world. In fact, amongst all the major indices, that is of developing countries and advanced economies, अगर हम एडवांस्ड इकोनॉमी की इंडिसेस भी देखें और डेवलपिंग कंट्रीज की भी देखें, इट इज ओनली अमेरिकन इंडिसेस दैट हैव गिवन अस a little bit greater return as compared to Indian index. Otherwise, Indian indices have given far better return as compared to any other index. Apart from American indices, बाकी हम किसी भी इंडेक्स को देखें, इंडियन इंडिसेस के रिटर्न जो एक साल में दे हैव बीन ग्रेटर. रिटर्न एज इन कितना राइज किया है, निफ्टी या सेंसेक्स, हाउ मच हैव दे रिजन बाय. It is on account of multiple things. Number one, Indian economy doing better. That is the first and foremost reason. Indian economy is doing better than rest of the world. Therefore, Indian companies are showing better growth. Foreign money is also coming into Indian economy, is being invested because the potential for growth here is higher. As we discussed yesterday also, Indian economy is expected to grow at the fastest pace next year, this year, next year, and therefore, as compared to other, returns in Indian economy are better. So first reason is that Indian economy better returns. Second, yes, there is a liquidity, there is high amount of liquidity in the system as well, and therefore that is also causing, that is being invested in the markets. So because of that as well, there is too much investment. On a positive note, about 220 lakh people, लगभग 2.5 करोड़ लोग, about 2.5 crore people opened demat accounts in the year of 2021, which is again very high. In 2020, about 4 crore people opened demat account. In half of 2021, around 2.5 CR people opened demat accounts. So lot of new money is entering into the economy. Savings of people that were blocked in their banks earlier or in other assets, land or gold, are now being invested in markets, and that is why again more investment is coming into the market. Therefore again Indian markets are doing well. There is a box given in your material that talks about MCSI EM index. MCSI क्या है? MCSI is basically Morgan Stanley. MSCI, Morgan Stanley. Morgan Stanley, one of the largest investment banks and a financial conglomerate group in the world. Morgan Stanley has multiple indices. Now think about it. Morgan Stanley, American bank based in as an investment bank based in America, but operates in rest of the world, entire world. If I have to invest my money in American market, for me, I don't know which stocks are there on American markets. What I will do is probably I will trust some fund which invests in American market. I will trust some mutual fund, some other fund which is investing in American market, give my money to them and they will invest according to whatever they think is best for American markets. A Japanese investor wants to invest in Indian market. That Japanese investor does not know where to put their money in India. Which company is giving good returns, which is a big company, which company has high potential for growth. A Japanese investor trusts Morgan Stanley. Morgan Stanley has developed an index called as Emerging Market Index, in which what they do is they try to assign weights to different countries and according to the weights they develop a particular index. If some Japanese investor wants to invest in emerging markets, what he will simply do is he will simply invest in Morgan Stanley's Emerging Market Index. He will give money to, I am simplifying it a lot so that you understand it. He will, what simply he will do is he will give his money to Morgan Stanley. Morgan Stanley will invest his money according to the weights assigned to different countries and in different countries according to various stocks which are there in that country's basket. If weight of Indian market in that index increases, that means globally more money is going to come and get invested in India. India's weight in MCSI's EM index, Morgan Stanley's Emerging Market Index, India's weight has increased to historic high. India's weight in this index is about 12% now, which was around 9% earlier. From 9 it had come down to 8.3 and now it has again gone up to about 12%. अब लगभग 12.5% है. Because of that, there has been an increased inflow into Indian equities market as well. So these are some of the reasons, some of the observation with respect to capital markets. Discussed yesterday also that capital raised, risk capital raised through markets has been highest in the past decade. New offers such as IPO and follow-on public offers, institutional placements, rights issue, all of these things collectively markets have been able, from markets we have been able to raise around 1.8 lakh crores, which is amongst the highest in last one decade total. So this is with respect to capital markets. As I said, I have also already talked about performance of Indian indices and investment by foreigners. I said in the beginning only, investment by FPIs last year has come down, but earlier it was quite high. In 2020 it was quite high. Last year it was a little bit less. Last year kam tha thoda. There is a section in your material, in your economic survey about pension sector as well as insurance sector. It talks about measurement of density and penetration of insurance. Insurance penetration क्या होता है? Insurance penetration is ratio of insurance premium upon GDP. Insurance density is ratio of insurance premium upon population. Insurance premium upon total GDP is your insurance penetration, and insurance premium upon population is your insurance density. As far as penetration is concerned, penetration has increased in our country. Right now the penetration is around 4.72. Life insurance penetration is at par with rest of the world, whereas non-life insurance is quite less. Insurance density में देखा जाए, insurance premium upon population, that is basically per capita premium कितना है, how much premium is a person on an average paying for insurance. Insurance density देखी जाए, so insurance density in India is quite less. Insurance density in dollar terms is only about $78, which is very less as compared to the world standards. So this is with respect to insurance. There is also talk about pensions. You can read it from your material, from your economic survey on your own about pensions. Finally, your economic in this finally this chapter talks about insolvency and bankruptcy code. It talks about the performance of insolvency and bankruptcy code, that how has this code performed since its inception, what changes were brought in last year, and last year what has been the performance. Insolvency and bankruptcy code is a set of laws that deals with insolvency of various debtors. Debtors mean person who has borrowed some money, who has taken some money from somebody. I am a lender versus you are a debtor. You have taken money. If you have taken money or you owe some money to somebody else, there is a liability on your part towards somebody else. You are not paying what your liability is to somebody else. To deal with such cases, we have got this Insolvency and Bankruptcy Code. The scope of IBC is not limited merely to financial creditors, that is, let's say to banks. If banks have lent money to a firm and that firm does not return money to bank, merely this bank is not covered by IBC code. That firm is not paying salary to its employees. The firm is not paying money to the people from whom it has purchased some material. Any person can approach this insolvency and bankruptcy proceeding. Any person. Under IBC, we have got the National Company Law Tribunal, which admits cases against corporates. If a firm is not paying my money back, I can put an application in NCLT. NCLT will review that application and admit it within a limited time. Once NCLT admits that application, the insolvency proceedings begin. Once they begin, what happens is the management of the firm is kicked out and a new set of people take their place. Insolvency and resolution professionals. They are responsible to run the company for some time. I'll talk about it in 1 minute. Plus present a resolution plan for the company. That is, how will money be paid back to the creditors? Anybody, financial creditor or operational creditor, how will money be paid back to them? Their plan is either approved or rejected by a committee of creditors by some special majority. Committee of creditors will either accept their plan or reject their plan. If the plan is accepted, then the proceedings will be according to that particular plan. If the plan is rejected and the time of acceptance has passed, there is a specific time period under which this plan has to be accepted. The time period is 180 days plus 90 days of grace period, that is a maximum of 270 days. If 270 days have passed and no plan has been accepted, then the project goes for liquidation. Liquidation का मतलब होता है assets sell कर दिए जाएंगे उस project के. Assets would be sold only to the extent that recovery has to be made. A project whose worth is 1000 crores, whereas the dues are only of 5 crores. You will not sell that entire 1000 crore worth of project to recover dues of 5 crores. You will sell that project only up to the extent of 5 crores and settle the dues of the person who was asking for them. This is basically what happens in insolvency and bankruptcy code. Before IBC के आने से पहले, before IBC, देखो, the idea here is to recover as much as you can. There is a creditor who has given money and the person is not paying money back. The idea is to recover your money as much as you can and as quickly as you can. If you do not recover that money in time, the value of that asset will keep on deteriorating. Therefore, you will not be able to recover even what you can recover today. So time is a very important factor here. Before IBC, out of any 100 rupees that went, any 100 rupees of assets against which a claim of bankruptcy was filed, you were able to recover hardly 15 rupees. Before SARFAESI Act of 2002, before that you could recover hardly 2 rupees against every 100. After SARFAESI you could recover hardly 15 rupees for every 100. That is recovery rate. कितना recover कर सकते हो? अगर 100 रुपए का due है, if the person is required to pay 100 rupees to you, how much can you recover? That is recovery rate. After IBC, recovery rate has increased drastically. At present, recovery rate is somewhere around 32. That means you can recover for every 100, you can recover about 32 rupees. In some cases, in later cases of IBC, बाद के जो केस आए हैं, in later case of IBC, recovery rate has been even more than that. In some cases, you have been able to recover almost 100% of the due amount. In most cases, you are obviously not able to recover the entire amount. You are able to recover very less amount. but still the amount that you have been able to recover is much higher than what you could recover earlier, thanks to IBC, Insolvency and Bankruptcy Code. Your economic survey talks about various developments of IBC. It talks about first, rescue of distressed assets. There is a table here in which we have got rescue, claims, liquidation, every information is there. That is there in your, obviously this is from economic survey, it is there in your economic survey as well. It assesses IBC. Economic survey is assessing IBC based on rescue of distressed assets. How many assets could it rescue? It assesses based on liquidation of distressed assets. What was the amount that you could recover from liquidation? For example, our economic survey tells us that for all the assets that went under liquidation, that means जिनको बेचा गया, for all the assets that went under liquidation, the total amount due to banks, जितना banks को मिलना था, the total amount due to banks was around 45,000 crore rupees. At the time when those assets went for liquidation, sick companies, defunct companies, companies that are no longer functioning, those are the assets which went into liquidations. The total amount that they were supposed to pay to the banks were about 45,000 crores. At the time they went into liquidation, the value of their assets together was around 2,000 crores. लगभग 2,000 करोड़ उनके asset की value थी. तो 45,000 करोड़ रुपए का due था, 45,000 crore rupees was the due. 2,000 crore rupees was the value of assets, and against that banks were able to recover almost 2,000 crores. लगभग पूरे 2,000 करोड़ रुपए बैंक ने recover किए. Almost लगभग जितना recover कर सकते उतना recover किया. Obviously it is much less than the maximum amount that was due to the bank. Amount due was 45. You were able to recover only 2. But still, because you were able to recover 2, which was the realizable value, you can say that it has succeeded a little bit. So therefore, this is second parameter on which IBC is assessed. Third parameter on which it is assessed is time and cost. How much time does it take on an average to resolve an asset versus how much time did it take to resolve an asset earlier? What is the cost? Obviously, costs have come down. Time of resolution has drastically come down. Finally, it assesses on the most important aspect, that is behavioral change. Behavioral change क्या है? Behavioral change is when a project is admitted for IBC proceedings, then we discussed the first thing that happens is that the management is kicked out. If it is my company, I have not paid money and my company's dues have been admitted in IBC, I will be kicked out of management of my company. So therefore, what will my intention be? My intention would probably be to settle these dues rather than being kicked out from my own company. अपनी कंपनी से ही मुझे बाहर निकाल दिया जाए, इससे पहले, इससे अच्छा है कि मैं dues अपने settle कर लूं. Around 18,000 applications were made to IBC. Out of that, only 4,500 were admitted. Most of the applications that were made to IBC were resolved before being admitted. This is a behavioral change. People opted for resolution beforehand, that is without entering into IBC process. People opted for resolution before that. So this is a behavioral change that IBC is driving. This is the most important part, behavioral change. Finally, this chapter concludes with some recommendation with respect to IBC. It talks about voluntary liquidation, how to ease voluntary liquidation. अगर मेरी कंपनी है, मुझे अपने आप liquidate करनी है, how can it be done? And it also talks about cross-border insolvency. Cross-border insolvency, we have got UNCITRAL principle, United Nations Council for Industrial Trade and Relations. We have got UNCITRAL principles that talk about what can be done to assist, to facilitate cross-border insolvency. A company who has not paid money is located in India as well as in foreign countries. How can banks in India proceed to recover money from its subsidiaries in foreign countries? Versus opposite can also be true. A company which is there in foreign country has defaulted there, its assets are located in India as well. How can that foreign country bank move against that company in India? So this is what is cross-border insolvency. So it talks about 4 principles of access, recognition, cooperation and coordination in order to improve cross-border insolvency. You can read about these principles from your economic survey as only. आगे बढ़ते हैं. Let's move on to the next chapter, that is prices and inflation. This chapter talks about what has been the situation with respect to inflation and prices in the world and in India. I think we shall be able to do it a bit quickly as compared to the last chapter. Inflation in the world has picked up in last year, more so in rest of the world as compared to India, but obviously we are not shielded from rest of the world. Because of other countries, inflation in India is also rising. Inflation in UK is at around 30-year high. Inflation in US at around 20-year high. Inflation in Argentina more than 50%. Inflation in Turkey about 35-40%. Inflation in Brazil about 10%. Inflation in rest of the world is quite high. Inflation in India has also increased, but as far as our headline inflation, that is CPI, is concerned, it is still within the tolerance range. WPI on the other hand has increased and has been in double digits in last year. In general, what have been the reasons for rise in prices in the world, across the world? क्या reasons हैं? Well, first and foremost, the rise in prices is attributable to excess liquidity. It is attributable to countries front loading their COVID expenditure, countries making direct payments to people, and those payments resulting in increased prices. Supply was constrained and therefore prices increased. So excess liquidity, transfers by government, fiscal transfers by government, that has caused increased prices. There has been a surge in energy prices, food prices and commodity prices. That is one of the major reasons, major aspects contributing to increase in inflation. Continuous disruption, on and off disruption in global supply chains. Rising freight costs again led to increased prices of all the commodities, landing cost of all the commodities, and obviously rise in crude oil prices, one of the biggest reason for increase in prices. Crude oil prices, which were around $19 on an average in 2020, have increased to around $90 or more than $90 in recent past. Today I think crude oil is somewhere around $100. Prices of crude oil have been increasing because of multiple reasons. One, there has been an increase in demand. Second, there has not been a consummate increase in supply. Increase in supply, as in supply was cut down because of COVID, reduced demand, and then supply has not picked up since then. Production has not picked up since then, and therefore that is causing a mismatch in demand and supply, hence causing an increase in price of crude oil. Certainly geopolitical tensions causing an increase in price of crude oil. So there are many factors, these are multiple factors that have led to increase in prices across the world. Let us look at what has been the domestic situation. Domestic situation has been, as I said, that our headline inflation, which is CPI combined, CPIC, that is CPI combined is our headline inflation. It has been within our tolerance range of 5.2%. Our tolerance range is 4 plus minus 2%, as in inflation targeting framework की जो range है. So this has been within that range, largely bound. Last year it was high, this year it is within the tolerance range. Whereas WPI, that has been quite high. WPI has been in double digits, and that is around 12.5-14% के आसपास है. For us, very important thing to note is which organization releases which index, which inflation number. WPI is released by, Wholesale Price Index is released by Department of Industrial Policy and Promotion, Office of Economic Advisor in the Department of Industrial Policy and Promotion. CPI is released by CSO, Central Statistical Office. or NSO now, National Statistical Office. Labor Bureau releases CPI industrial worker, agricultural labor and rural labor. Labor Bureau releases last three. NSO releases CPI combined, and Office of Economic Advisor, Department of Industrial Policy and Promotion releases WPI. ये हमारे लिए जानना बहुत जरूरी है. There can be a matching question in your exam, which are the index and releasing authority. Let's look at the components of inflation in a bit more detail. We have got CPI here. CPI, as we said, CPI has been within a tolerance range, within our tolerable range. CPI has decreased or is less as compared to last year, primarily because the food component of CPI is less. This pink line that you see on your screen, that is food inflation. Food inflation has cooled down since last year. Last year it was quite high, this year it has been low, and that is what has contributed to reduction in CPI. Food articles have the highest weight in CPI inflation. If they come down, CPI will come down. There is core inflation, as all of you know. Core inflation क्या होती है? Core, we have got CPI combined. Combined का मतलब होता है rural and urban. There is CPI urban and there is CPI urban and CPI rural. Consumer price index urban and consumer price index rural. Combined means rural urban combined. We have got within CPI, we have got various baskets, various items. Food is one of those items. Fuel is one of those items, fuel. Lightning is one of those items, lightning, light, fuel and light. There are multiple parts of CPI inflation. Some of these parts are volatile and some are not volatile. कुछ parts CPI के volatile होते हैं, as in prices of some aspects of CPI increase or decrease in a volatile fashion. Other aspects are less volatile, as in more stable. We remove the volatile components to arrive at something called as core inflation. Core inflation. Core inflation क्या होती है? You remove the volatile components of CPI. Now there is a definition of core which is non-food, non-fuel. Non-food, non-fuel inflation is core inflation. We take up all the other baskets and see what has been the change in price in that particular basket. That is our core inflation. Now, our economic survey proposes a new core inflation which they call as refined core inflation. Refined core inflation. This is refined core. I think this would not be visible. Black ke upar black hai. This is refined core. Refined core inflation is from your core inflation. When you calculate core inflation, that is, you remove the food and fuel component. Fuel component, that is basically your petrol and diesel, is not exactly the part of fuel basket which is in CPI. CPI के अंदर अलग अलग categories of goods हैं. There are various categories of goods and services within CPI. Various sub categories of goods that are there in CPI. Food basket है, fuel basket है, lightning basket है, housing basket है, clothing basket है. Various basket of goods and services, various sub basket of goods and services form what is CPI. From that basket you remove volatile parts, as in you remove food and fuel component. But जो हम standard core inflation calculate करते हैं, the standard core inflation that we calculate, that core inflation still includes fuel. You are able to remove only some part of fuel but not all part of fuel. Most importantly, petrol and diesel are not removed when you calculate core inflation. Petrol and diesel prices are part of core inflation that we calculate. So therefore, our objective was to remove those items whose prices were volatile. But we are not able to achieve that objective simply by using core inflation. So economic survey is proposing that rather than using core, we should look at what is called as a refined core. You further refine this core inflation by removing those petrol and diesel components and then arrive at refined core. They say that if we look at the refined core inflation, inflation has been even lesser. अगर हम volatile components हटा दें, as in truly all the volatile components, that is food and fuel components, if we remove the volatile components, that is whose prices are highly volatile, then inflation, that is CPI, has been even less. So this is with respect to CPI, CPI combined, CPI core and CPI refined core. Let's look at the contribution of various components of CPI basket to CPI. As I said that there are multiple sub baskets. For example, you see here that there is food and beverage basket. Last year it was the largest contributor to inflation. This year it has come down, and therefore because of this inflation is less. On the other hand, if you look at this component fuel and light and miscellaneous component, जो फ्यूल वाला कंपोनेंट है एंड दिस मिसलेनियस कंपोनेंट, दिस हैज इंक्रीज, विच इज द बिगेस्ट कंट्रीब्यूटर टू इंक्रीज इन सीपीआई दिस ईयर, एज इन इंक्रीज इन प्राइसेस दिस ईयर. इंक्रीज इन प्राइसेस, नॉट सीपीआई. सीपीआई तो कम हुई है. सीपीआई कम होने का मतलब ये थोड़ी ना है कि प्राइसेस भी कम हो रहे हैं. वी हैव अ सिचुएशन ऑफ डिसइंफ्लेशन and not deflation, Prices are not falling, simply inflation is there at a lesser rate as compared to earlier. Last year it was at 6%, 6.6, this year it is at 5.2%. That means prices तो इस साल भी increase हो रहे हैं. Increase in prices is contributed to more by this fuel and light component and miscellaneous component, which consist of petrol and diesel. Your economic survey tries to break down the effect of various components as is discussed in this chart, and then talks about them in detail as well कि किस component का कितना हिस्सा है, what is the contribution of each of these components individually in the rise in prices that we have seen in past year. One important point for us to note, two important points for us to note is the contribution of petrol and diesel prices, and second is edible oil prices. I think we talked about prices of edible oil in our yesterday's class as well. Edible oil, our imports of edible oil in volume terms, ये जो green bars हैं, this is representing volume. Our imports of edible oil in volume terms have reduced, whereas the value of our import of edible oil has increased. Even though we are importing less quantity of edible oil, but the money that we are paying for importing edible oil, that has increased. So this is showing us a drastic increase in price of edible oil. ये दिखा रहा है graph. This is drastic increase in price of edible oil. Edible oil prices have increased so much that even when we are importing less than half of what we were importing earlier, we are paying almost double than what we were paying earlier. So very important aspect with respect to edible oil. So two things, one is prices of petrol and diesel which have been higher, second prices of edible oil which have been higher, which are the largest contributors to the increase in prices that we saw last year. There is a box in economic survey which talks about volatility of prices of various agricultural products. It talks about potatoes, tomatoes, onions, इनके बारे में बात करी है. So it gives examples of onion and tomato and says that we should be able to separate the volatility in prices due to two components, due to two reasons. One reason for volatile prices is seasonality of production. There is a production cycle. You cultivate some crop in particular month, you harvest it, and when you harvest it, its supply comes into the market. When its supply comes, then the prices fall. when the supply ends, in 2-3 months the supply will end, and therefore we will see a rise in prices from those months. So one variation of prices or one volatility in prices is because of production cycle, and second volatility is because of certain shocks such as disruption of your production cycle. एक तो है normal production cycle. Normally when the crop is grown, harvested, जब harvest होके market में आएगा, then the price will fall. So if all else is equal, then a product's price cycle will be something like this, that when its harvesting is done, then its price falls. When its supply is ending, then its price will rise in the market. And this volatility, this variation in prices is interjected by certain shocks such as weather shocks, drought or flood, geostrategic shocks, international shocks. Many factors will cause certain shocks in the production cycle, and therefore there would be some variation of prices of these goods. So it talks about separating these causes and try to address these causes. To remove or reduce the volatility that arises because of production cycle, it argues for development of storage infrastructure, which is exactly what our 3 farm laws were trying to do. Anyways, it argues for development of storage infrastructure. It cites various schemes such as Mission on Integrated Development of Horticulture. It talks about government infrastructure scheme, in which government is trying to build infrastructure with respect to agriculture. It talks about Operation Greens. It talks about Kisan Rail. All these schemes try to augment the supply side with respect to production. Development of infrastructure, development of storage, easiness of movement, incentivizing production. It talks about all these things with respect to reducing the volatility in prices because of the production cycle of something. Okay, let's move on from this. Next we have WPI. So as we discussed, as I said, WPI has been higher, much higher than what it was last year. Last year WPI was quite muted. On an average, last year it was somewhere around 0% only. Last year WPI was quite low, all commodities, but this year WPI has been raising higher, as in it was in double digits almost throughout the year. What were the reasons for increase in WPI? Reasons for increase in WPI are: WPI consists of all the goods that are traded in a wholesale market. Depending upon what is the composition of goods that are traded in the wholesale market, every good will have its weightage. Naturally, services are not tradable. It's not possible to trade services in a wholesale manner. Therefore, services are not part of WPI. WPI consists only of goods and not of services. Weight of different goods that are there in WPI will be based on, please pay attention, weights of goods that are there in WPI will be based on the amount that they trade weights in wholesale markets. Largest weight in WPI is of industrial manufactured goods. Second largest weight is of oil and related items, fuel and power group. Industrial manufactured goods, their prices have increased because of inputs prices have increased. There has been a rise in price of basic metals, iron ore, aluminium, tin, or price of coal. Inputs for production, inputs that go into production process, their prices have increased, and that has caused rise in industrial costs. Therefore, first reason for increase in WPI. Second reason for increase in WPI is because of demand is slowly picking up, and therefore more goods are being demanded. WPI production is taking place, and therefore there is demand is picking up, more production is taking place. That is resulting in some sort of shortage of goods, which is causing increase in prices at the industrial level itself. Certainly there has been rise in crude oil prices, which act as an input in almost any industrial process. In transportation they act as an input, and therefore that is again causing a rise at wholesale level. So various subgroups in WPI such as fuel and power group, minerals especially basic metals, manufactured food such as edible oil, all these are showing a rise in prices internationally, and therefore our WPI is also rising. Even textiles, prices of cotton have increased, and therefore textiles are also showing a rise in prices. Rise of prices of textiles is not as high as rise in prices of other elements, but still it is about 15%, and therefore that is causing our WPI to move higher. More important than simply looking at WPI moving higher and CPI moving low is to look at reasons for divergence between WPI and CPI. Why is there a divergence? WPI is moving up whereas CPI is moving down. Last year CPI was up and WPI was down. So there is, as you can see on your screens, there is a divergence between CPI and WPI. Last year CPI up, WPI down. This year WPI up, CPI down. So what is the reason? Both are indices of inflation. Both are trying to tell us, both are trying to gauge some sort of inflation which is happening. CPI tells us all is well, WPI tells us all is not well. Last year WPI was telling us that prices are stable, almost constant, zero rate of increase, whereas CPI was telling us that prices are rising at around 6.5% rate of interest, rate of increase. So why is there a divergence between CPI and WPI, that is inflation as measured from CPI and WPI? There are various reasons that can be ascribed to it. First reason is that CPI and WPI both have different compositions. The purpose of CPI is different, purpose of WPI is different, their composition is completely different. Since composition is different, weights of items are different, there is naturally going to be difference in CPI and WPI. CPI, for example, has the highest weight of food items. WPI has the highest weight of manufactured items. Weightage of food items in WPI is relatively less, whereas weightage of food items in CPI is relatively high. As we have seen, if prices of food items have cooled down this year, naturally CPI would be less. If prices of manufactured items have gone up this year, naturally WPI would be high. Therefore, the first reason for divergence in CPI and WPI is the purpose and the composition according to that purpose. Composition is different, therefore naturally there is going to be difference. There is a statistical reason as well, base effect. Last year CPI was in this range, and therefore if you look at this range of CPI, if you look at this graph of CPI, CPI has almost been in this constant range. CPI has almost continuously been around this average level. Your average level of somewhere around 5.5%, sometimes more than this, sometimes less than this. CPI has been around this average level, whereas WPI last year was quite low. Therefore, this year when we look at WPI, it is growing at a low base. This is called as base effect. इसको बोलते हैं base effect. Base effect is simply a statistical thing. Simply think of it like this. Last year the value was 100. Last year the value was 100. Last year it increased from 100 to 102, and this year it increased from 102 to 111. Versus last year value was 100. Last year it increased from 100 to 105, and this year it increased to 111. So 2 साल में, within 2 years, this has gone from 100 to 111. This has also gone from 100 to 111. Whereas if you look at the rate at which both these things have happened, in this year this had grown by 2%, whereas this had grown by 5%. In this year this had grown by about 8%, whereas this had grown again by 5%. तो आपको इस साल क्या लगेगा? This year you will feel that there is a faster pace of increase here. It is growing at 8%. Why? Because it is growing on a lower base as compared to this. This is called as base effect. Because last year WPI was low, therefore it was statistically natural for it to show a higher number here. It is not only because of this base effect that WPI is higher and it is diverging from CPI, but partly it is explained from this. From its composition we look at it, food items highest weight versus food items not so high weight, manufactured item highest weight in WPI. So partly because of composition, partly because of base effect. WPI has lot of imported items and hence it is more sensitive to that. Manufactured goods have so many imported items, therefore there is imported inflation. So therefore more sensitive, it is more sensitive. When economies reopened, that had put pressure on industrial inputs, especially raw inputs like basic metals, and therefore that has caused increase in WPI more as compared to CPI. Higher freight cost, as in why WPI has higher freight cost, we have discussed this. Also, very important thing, in 2017, in 2017, we revised in 2017, we revised the manner in which WPI is estimated. In 2017, we moved WPI to be more closer to producer price index, wherein we excluded tax information from WPI. होलसेल प्राइस इंडेक्स के लिए प्राइस इंफॉर्मेशन हम जहां से कलेक्ट करते हैं, कहां से करेंगे? होलसेल मार्केट से. टू कैलकुलेट होलसेल प्राइस इंडेक्स यू विल कलेक्ट प्राइस इंफॉर्मेशन फ्रॉम होलसेल मार्केट. To calculate consumer price index, you will collect price information from your retail market. When you collect price information from wholesale market for the purpose of calculating WPI, you exclude the taxes. You do not include taxes in WPI. And since taxes are not included, therefore it is more sensitive to the input prices. In WPI, since taxes are not there, in CPI taxes are there. In CPI fuel is there. Government reduced excise duty on fuel and that caused reduction in oil prices, in petrol and diesel prices last year. That did not change the cost of input of crude oil. Last year crude oil price was less, but petrol price was high because government was levying high taxes. Government reduced those taxes and therefore at a consumer level there is not much change in price. Whereas at wholesale level there is a change in price because input price has increased. Consumer ka price kya hai? Basically input plus tax, that is what I pay. Last year input cost was less but tax part was higher. This year input part is higher but tax cost is less. So for me there is relatively less change in price, but for the wholesale market there is a very high change in price. So this is what is reflected here, which is causing a divergence of CPI and WPI. So this is with respect to CPI WPI divergence. There are some miscellaneous items at the end of your chapter. One is with respect to housing prices and second with respect to pharma prices. Various observation with respect to housing prices have continued to increase, transactions almost at the same level. So this is with respect to housing prices. Economic survey talks about various steps that have been taken to provide for affordable housing. Basically Pradhan Mantri Awas Yojana, urban and rural, they talk about it, what steps have been taken to make sure housing is available at affordable price. Housing prices are in most of the places, housing prices are somewhere around the same level as compared to what they were in 2019. In some places they are high, as in they continue to increase despite COVID. In some places they continue to decrease because of COVID. Similarly, pharma prices items, economist talks about the price control measure that have been taken with respect to pharmaceutical components such as medicines, such as various instruments, such as stents, such as knee replacement, price control that government has implemented with respect to various pharmaceutical items, steps that were taken to cap the prices of concentrators, scheduled drugs, non-scheduled drugs such as remdesivir and tocilizumab, etc., etc. So all these steps they have mentioned in economic survey, what steps were taken with respect to control of prices by the government last year. So you can have a look at these items from your economic survey, क्या क्या steps लिए गए थे. Finally, the economic survey also suggests some measures that can be taken in long term to augment supply. What steps can be taken to improve the supply of various items so that prices are shielded? To shield the prices from various fluctuations, what steps can be taken? So they suggest that we can take steps, for example, with respect to changing production patterns, move away from a cereal intensive cultivation to changing cropping pattern where we grow pulses, oil seeds, etc., and make ourselves self-reliant in these things which we import. We are importing pulses from multiple countries, palm oil from various countries. It talks about increase in prices in pulses, palm oil. So it says that we should go for changing production patterns so that we become self-reliant in these things. It talks about calibrated import policy. It says that we should not be changing tariffs on goods that we import as a knee-jerk measure. If there is, usually क्या बोलते हैं, usually what happens is, if there is a rise in price of something, you reduce the tariffs so that you can import it. If there is an increase in price of something, if there is a fall in price of something, you increase the tariffs so that you don't import that thing from abroad. If there is a fall in price, of tomatoes, is it right for you, is it feasible for you to import tomatoes from abroad? अगर बाहर से भी टोमेटोज इंपोर्ट करोगे तो टोमेटो का प्राइस और गिर जाएगा डोमेस्टिक मार्केट में. सो क्या करोगे आप टोमेटोज का इंपोर्ट रोकने के लिए? यू विल इंक्रीज द इंपोर्ट ड्यूटी ऑन टोमेटोज. If there is a rise in price of tomatoes, then what you will do is you will reduce import duty on tomatoes so that supply can be augmented here. So what happens is government takes these decisions with respect to import export tariffs in a knee jerk manner. When it takes decisions like this, it leads to the producer having uncertainty about the tariffs and therefore does not indulge in cultivation. If somebody has to produce palm oil, has to have a plantation of palm oil in the country, that person must know the competition that he or she is facing. If government reduces import tariff on palm oil, therefore I will not be able to sell my palm oil in the country because anybody can import cheaper palm oil from Malaysia or Indonesia. So there must be clarity on this. Tariffs must not change as a knee-jerk measure. This is second recommendation that economy survey gives about improving or augmenting supply. Third recommendation that they give is with respect to development of logistics, that is development of transportation and infrastructure, development of storage infrastructure. You develop storage infrastructure, from that you can build strategic reserve, you can build some sort of buffer reserves. When prices rise, you can strategically release quantity from those buffer reserves to control the prices. So it talks about private sector involvement in building up of reserves, in building up of storage reserves, in building up of agriculture related infrastructure. Certain steps that the government has taken, for example, agriculture infrastructure fund, through which government is trying to develop in a PPP mode as well as full financing mode various infrastructure related to agriculture aspects. This is the recommendation of economic survey with respect to controlling prices by augmenting supply side measures which will act in long term. This is the end of this chapter. With this, we have come to the end of today's session, the part which I will be taking up. I hope you have enjoyed this session. I sincerely hope that you have understood. Those who are giving exam this year, I hope that you have been able to revise your concepts and take home some important observations that would help you in writing good answer in mains and answering questions confidently in your prelims examination. I wish all of you all the best. To those who are preparing already or those who want to step into preparation, I welcome you all. I wish you all the best. Make sure, as I said in last class as well, make sure that you do read the economic survey. Please read it as a story. Simply read this economic survey as a story. Don't try to remember things which are there. Read it as a story. Look at the graphs, look at the charts, those diagrams, look at those trends. Those trends, those charts will help you to write better answers and answer your prelims questions confidently. With this, I'll take your leave. Take care everybody, stay healthy. We'll see each other next time. Till then, take care, bye-bye. All the best to everyone. Thank you so much.